Hello, everyone. Welcome to State of the Market. This is David Russell, Global Head of Market Strategy at TradeStation. It's great to be with everybody. All right, today is Monday, October 27th, 2025. And today's stream is called Stocks Breakout Again. And, it's interesting, the S&P 500 is breaking out of a two-week range as we're going to get to. Last week, we highlighted the range, and then we broke out of it late last week. Got a little more confirmation of things happening between China and the United States, and that just kind of built on it today. Well, actually built on it last time. We got news out of China. So we're also kind of looking at some things happening with autos. It's kind of interesting. Everything there is the attention on technology, but there's also some interesting news with autos. These are standardized returns of some ETFs that we're going to be talking about. And today, as we look, the S&P 500 is getting over 6,800 for the first time. It looks like it's set to close above 6,800 today. It probed it on Friday, but didn't stay there. And we're seeing the mega cap sectors lead, which is kind of what we've seen when the market goes in periods of advance. We see the XLK, which is tech, XLY, XLC lead, and that's kind of happening again today, which is interesting. So we have the Federal Reserve on Wednesday plus a bunch of earnings. I want to very quickly show you this is earnings. This is a different workspace. I've not given you guys this workspace, but if you go to tradestation.com and you go down here, we have this article. I've given you a similar workspace. Automaker stocks drive stocks higher as earnings arrive. That's a lot of the stuff we're going to talk about is in this blog post. But if you look back on our market trends over here, that we did on Thursday. At the top of market trends, we have a zip file, and in that zip file, you guys have the ability to actually load a workspace that has similar functionality to this one. The key thing is just reminder that the workspace we share with you guys on Thursdays does give you the ability to plan for earnings season to basically map them out. What I like to do is I like to look at the companies that trade a lot of options, for example, and I like to basically kind of separate them out and then sort on seeing who's coming up. So we can see we have Meta, Microsoft, Apple, Amazon coming up in the next few days. These are the really big names. You can also see the market cap. You can see the $1 trillion names here, all kind of standing out. And then you can see like Nvidia coming up all the way out in November. So it kind of helps you plan a little. So I want to remind you guys that that is something that is there. Um, we're expecting a meeting between President Trump and President Xi on Thursday, I believe. But I want to also mention that the real story to a certain extent might be inflation coming down in a more meaningful and lasting way as we're going to discuss. And we do outline it in this article. Some of you look here, some of these things about shelter costs that we're going to mention in a minute. The other thing I want to mention is in some ways is that something interesting, if we look at Tesla here very quickly, might actually be setting up now for something more significant on the longer term chart. On the weekly chart of Tesla, it's kind of like challenging these old levels from back in 2024. But there's a whole new thing happening in Tesla as it kind of shifts to robotics and things. And so I think right now, if you look at the old weekly closing high on Tesla, which was right around here around 237, you can see now that we're kind of clearing it. And it's had an interesting period of pretty relative tightness here in Tesla for a while. And it has, look at how these weekly lows were slightly higher. If you kind of look across here, you can see on the weekly also you can see it kind of made this rounded sort of bottom. And I think this is an interesting sort of thing to pay attention to. This one could be a pretty significant stock to watch. Where's my drawing tool to draw a curve, kind of like like this kind of. It's more visible really on the daily. If we look here on Tesla, I think it's interesting because you can kind of see how these form a series. That's a Friday, that's a week, that's a different week right there. It's another Friday, and that's another week. So you can basically see we have this period of consolidation with the higher weekly lows, and now we're showing some signs of breaking out here. So I think Tesla here is actually pretty important to look at. It's in the XLY that we're going to get to. Also, if you look over here on our blog, in addition to this one, I'm going to just go back up to the main blog overall. We did a special report on earnings season for big tech. It's this one here, AI robots, iPhones with this robot face. You want to check this out because we actually go through some of the interesting things that are now kind of playing out for some of these names, especially some of the stuff happening in Alphabet. With some potential here for AI boosting their advertising business. So in this article here, there's a few things. I'm going to just zip around some of the things that I do cover in this article. So you might want to just go back to this one. The automakers drive stocks higher. So overall here, I think what's interesting is, we basically got, over the weekend, we got this confirmation with China. The kind of news, this is Alibaba. So we have the news here that basically, the United States and China are kind of going to come up with a deal or something, however you want to view it, with all the back and forth we get. But the key thing is that this is a positive for semiconductors, for chips, for stocks, semiconductor, index here, SOX. All of these here are, I think, important to realize that chips just continue to have floods of good news. And when you look at it, even though it's a little bit extended here, we had a period here of almost 3 or 4 weeks of sideways movement in chips, really since the beginning of October, and that it's only breaking out of now. So people might look for some real extension here, especially maybe all the way until Nvidia earnings, just to kind of way to maybe put a time frame on it. Um, Also, I want to mention here that this is something that's potentially positive. I'm going to look at the TLT, the bond ETF. This is a price of bonds, but I think right now, with the idea of China and the U.S., potentially, if we are kind of at a point when this thing goes away, or kind of improves, that could actually be a positive for bond prices. And I have been worried for a while about inflation from tariffs and the deficit, but I think we're setting up now for some things that are potentially very dovish. And I'm going to get to those, but I want to just point out that with China, it is an extra kind of positive for TLT. It means maybe they'll buy more of our bonds again. This whole de-dollarization theme that's been in place for a while, that this whole narrative could diminish for a period of time. Long term, there are probably arguments that this will be something that maybe is, something that continues. But I'm talking for the next month or two, couple of months or quarter or so. This might be something that is played out to a certain extent. So I do want to emphasize that. Now, over on TradingView, we did this idea here on Alibaba, and I want to point that out because these Chinese stocks have really shown some very interesting sort of strength. And I think overall, there's things that people should, kind of be aware of. But this is interesting bullish triangle here in Alibaba that it's breaking out of today. So I think that's an interesting one to kind of be aware of. Now, at the same time that it's good for Chinese stocks, it's not really great for things like gold and silver, which are at this point, if you kind of just think about gold, maybe like right here, where was it in April? I mean, it entered a period of consolidation for like months, and maybe that's what we're seeing the beginning of here. So I think it's just important to realize here with gold, it kind of went under 4,000 today. And from my perspective, given the situation with the Chinese thing and everything else improving again, or however it looks like that's going to happen, from my view, it creates a difficult scenario for gold at this point in time. Not to say it's going to necessarily be overly bearish or anything of the sort, but it could simply be in for another period of sideways movement that could last a while. And the same might be true also for things like silver. Just kind of point that out. It's had this pullback, but at the same time, it doesn't mean that it just has a strong continuation. I've noticed when things are getting these deeper pullbacks, they are not in most cases resuming quickly. They are kind of going through a period of suffering here. And so I think at this point, this is something of a kind of extreme blow off move. It's not to say it's a top for silver overall, but it might be something that we have to get past earnings. We have to get past the Fed, maybe get into some other sort of catalyst before things really get moving again in the metals. Now, on the other hand, I want to mention that there are some of these chemical companies. That's the wrong one. I want Eastman Chemical, because I mentioned this because the Chinese thing, these companies, Eastman and Dow, they really took a beating because of this trade war stuff. And some of these names have really fallen, and these might be setting up for something of a recovery. So I want to just point out there are other chemical names, but it is interesting. They've had nothing but bad news for a long time, a lot of negativity in the chemical stocks in different ways. And some kind of trade relationship improvement might do something for these guys, maybe for a month or two of potential rebounds. I want to point that out. Also, retail stocks. It's very interesting. This is a retail ETF, and not really sure to think about this. Remember, these guys report later in earnings season, and then of course we have the holidays. So, a trade deal with China could turn into something positive for these guys. And I think what's interesting is that look at Carter's. They had a big tariff hit, and they came running back today. CRI. Best Buy has been showing some strength here overall as well, some basing after a long sell. So I want to just kind of mention here that there might be something that people look to in retailers as a sort of Chinese improvement. And the other thing that's interesting now is that now we're waiting for some kind of recovery between Trump and Lula in terms of Brazil, EWZ. This is on the list next to something. So I think it's interesting here to kind of just think of the different catalysts that are happening. Earnings season is coming, and it's definitely something we're going to be mostly focused on. But I think that we also want to realize that this has been a remarkable year for global stocks, and it follows 15 years of underperformance. And going forward, global may continue to be a spot that sees some outperformance, and people might want to be kind of thinking about it. Now, it's interesting here in our articles is that we talk about the Fed, and I think there's a few things. First of all, the Fed is looking to end quantitative tightening. I think that's a really big deal. So I think that's something that people, really, this is going to become more of a narrative. They've been doing QT since 2022, and they were first hiking rates under Biden, and now that is potentially fading. But the other thing I think that is extremely interesting was shelter costs are coming down. So look over here at this on the St. Louis Fed website. This is the owner's equivalent rent month over month change. It was the lowest reading since really all the way back here in November. I'm trying to actually get it. These numbers, if you actually do the exact math, it was the lowest reading since November of 2020. So this is a month over month change in owner's equivalent rent. Now look at it on a yearly percentage change, year over year, percent change from a year ago. And you can see this thing has just been in this steady downtrend. So I think this is very important now because we're at a spot where, remember, it was still running up here at like a ridiculous wait a second. I don't think I'm showing quite the right number. Let's go to percent change from a year ago. I apologize. I mean, this thing was running at like 7, 8, 10%. And when it went from 8% to like 6%, it was still an upward pull on inflation. But now that it's getting down here, 3, 4, if this continues lower, which when you look at the way this thing runs historically over time, remember this is inflation of basically inflation. When this thing runs in a certain direction, there's a good chance it's going to continue. So I think right now we're setting up for owner's equivalent rent, shelter cost, making a continued move sort of lower. And remember, all this has to do is basically stay low. If it goes to like 2 to 3%, a lot of the real thing that pushed inflation higher goes away. And this is, I think, really important. Now, the other thing that's interesting also is that there's a lot of evidence here. There's other anecdotal stuff we talk about here. The National Multifamily Council said something. Totality said something. Something else that really, I think, is big is that insurance premiums are coming down. I cannot overstate that. That was a huge thing that was like burning people on inflation, and now they're coming down. And we're going to actually get to that because it's bad. It's turning into not the greatest news for Berkshire Hathaway, and we're actually going to get to that one. But I think it's important to realize here that as home prices come down, as all these sort of things trickle through, that actually turns into something that is important to the Fed, and it's going to make it easier to be dovish, despite whatever happens with tariffs, because all those consumer goods overall are not as big in the overall CPI basket as shelter costs. All right. Next thing, autos was actually our lead story, and I think this is extremely interesting when we look at autos. Um, Actually, before I get to, I do want to mention biotech. Biotech, there's this company RNA. Barely see it. It had this huge gap higher today. Um, I can't remember who bought them now. Somebody bought them. One of the big Europeans bought them. You can look it up, RNA. But the thing is, there's other names out there that have been kind of moving in the biotech area. So you might want to just kind of check this out because I think this is, I don't have them in front of me right now, but this is just something that the biotech, it's NVI on TradingView that I'm using here. The biotech index. We basically did a TradingView ID on it somewhere down here as it kind of broke a long downtrend that was on the weekly. I mean, this thing has also been kind of like global, like kind of just dead for a long time. I mean, it's just it didn't participate in a lot of these sort of earlier rallies when the S&P went to new highs. It's been just kind of dead money. But now we're getting M&A and a lot of other things. So I think right now biotech is something that people might want to really pay attention to. It's really been performing. So I think people might want to put that on their radar as well. Now, automakers. This was huge in my view. So General Motors had really a pretty amazing, weekly rally last week. It was the biggest weekly rally since coming out of COVID. It broke out to new all-time highs. In my view, there's really three things going on here. The first thing that's happening is there's real demand for new cars. And if you look back, Cox Automotive on the 25th of September put out a report when they raised their new car sales estimate from around 15.6 million units to 16.1. General Motors is going to have AI in their cars potentially next year. They're going to, I think, do Gemini, the Google Gemini, so you can drive down the car having a conversation with a large language model, which is something that's interesting because when you think about things like Meta, they're doing their glasses when you can be walking around and it'll tell you what restaurant to go to or where to go buy something. I mean, I'm not sure, but you would imagine this functionality like that will be trickling through. Now, the other thing to realize is that the cars in this country, there's various articles about this, but America now has the oldest fleet of existing vehicles ever. And so there is the potential now for people to come through and start fixing cars. Now look at a stock like ORLY, O'Reilly Automotive. This company basically made its money for decades, or yeah, I mean maybe not decades, but for many years. This company has really, done well. O'Reilly Automotive and the other one is AZO AutoZone. These guys have really done well based on people fixing their cars and all that sort of stuff. Look at a stock like AutoNation, AN, KMX, CarMax. These are all used car related companies. They all benefit from people keeping old cars, and they all have charts that are in various degrees of deterioration. And then you get General Motors breaking out to an all time high. General Motors doesn't sell used cars, they sell new cars, and that's the whole point. So I think the thing here is we are in a potential kind of turning point toward new cars in the United States. And I think it's a very big deal. And I think people kind of over time, this could filter through in a lot of different things. We've been kind of waiting for this to happen for a long time, and COVID kind of disrupted it because we had all these issues with COVID vehicles and everything else. With COVID disrupting production and all kinds of things. But now, in many ways, the pieces are finally coming together. And of course, what do we get? We get now the Fed is on track to be cutting rates. Don't forget the Fed meeting is on Wednesday, and everyone expects a 25 basis point cut. And like I said, at the QT and inflation and all that stuff. The other thing is that we're now starting to see some interesting cost cutting. General Motors is cutting jobs involved in design. Um, they're using AI. Ford is cutting jobs, and Jim Farley of Ford was recently talking about how a bunch of white collar jobs are going to disappear because of AI. So these companies are finding ways to cut costs despite tariffs. General Motors, and Ford, and of course, I mentioned Tesla. Now, Tesla is in a spot when Tesla is looking to basically reinvent itself as a robo-taxi company. So they're kind of saying we're going to jam vehicles on the market, and then we're going to monetize robo-taxis and the software and stuff. So it also creates a situation which is potentially bad for the used car companies because it's going to create a situation where Tesla is going to be competing trying to drive volume. So a bunch of people, a bunch of these OEMs are all going to be trying to drive volume. And then also Stellantis had, they also had strong production. I mean, I don't know much about Stellantis per se. The thing is they also had a big production quarter as well. So we are now going to start to see, I think, a return of new vehicles in the United States. And it's been something that we've had this used vehicle boom for like a long time. I don't know if I call it a boom, but we had this a lot of used vehicles. People didn't really come off in a big way and buy lots of vehicles coming out of the financial crisis. And COVID came along and messed things up, supply chains, all these things. And finally, we're in a spot here where the automakers are looking to benefit from a new car sales cycle. And I think it's really important to realize that the AI thing is happening, but this auto thing is now just starting to kind of take off. All right, now can we turn to the overall indexes here? S&P, SPX here on TradingView. Remember, we use TradingView because it allows me to kind of just do some quick, easy markups, and I kind of save it from week to week. And so here, I think essentially you can essentially see the range that developed in this big candle back the first full week of October that we got stuck in on the idea of China, having tensions again. And if you look here, I'm going to take off some of these lines, but basically it was a pretty strong sort of range that we had gotten trapped inside of, and that we basically that we broke out of on Thursday. On Thursday of last week. You can see this range essentially right there, and so you can put it in different places, but essentially we broke that range and we've been, kind of extending from that. So to me, this is important. We had a sideways consolidation we now broken out of, and that often gives rise to further continuation. That's the S&P. The Qs on the weekly are pretty much the same thing here. Um, it's really interesting to kind of see how I think there was this level to close back on the first week of the first Friday of October. You can see that this close basically, you can see how we kind of held it, broke under it, held it, then probed it last week. So again, the resistance becomes support, and now I think in some ways the level to watch could be the old high here. But from my view here, this is something where even at this point, I think last week's close, if any level is important, that's going to be more of where I'm going to be looking now. RUT, from my view here, this does have not coming of a confirmed breakout, but it just remains in a sort of spot when people are just not that jazzed about it for various reasons, and I don't fully understand it. I think it's interesting. We've talked about how emerging markets have kind of been beating the Russell, and that remains the case today. So I think this is an area where even if it has broken out, it's not clear we're getting really that extension in it that people might be looking for. Now, the 10-year Treasury yield is at this point, I think also in a spot where it's just kind of stuck and drifting around. And from my perspective, it may have further downside. And I say that simply because of the fact that, there is at this point the potential, I think, for bond prices to do better, given the inflation trends I talked about, and also given where the Fed is. So, from my view here, this is nothing that has any kind of real clear directional trade on it, but it does kind of give us something that is more positive overall for risk sort of assets. That's a TNX. Now, the XLB materials here have this trend line that kind of is emerging that they're kind of trying to break through. So, from my view here, I'm kind of watching this, but I think this remains kind of a dud sort of sector. It's very confusing. It has a lot of weird sort of companies in it. In my view here, it's kind of become like real estate when it's just in a range, and we really want to see a breakout through a vertical, a horizontal line, and not a breakout through a diagonal line like a trend line. So from my view here, this is something where it's just kind of stuck in this range, and people might want to really wait for a break above like 92 and a half and realize that you might be waiting a long time. And so maybe better to look somewhere else. Now, it is interesting when we turn to the XLC communication ETF that essentially here, um, this has been remained, a stronger long-term trend than a lot of others and most other of them. And essentially here at this point, it, had this pullback and it is not yet going back to its old all-time high. So from my view here with Google reporting this week and Meta reporting this week, it's something that really kind of puts us on track. Let me actually just confirm that. Look back over my earnings here. Yep, they both report this week, Meta and Google. I try to not use my memory very often because we have TradeStation data right here, and it's always best to rely on data instead of your memory. So I wanted to just double check that, and it's right there. That's one of the great things about having a platform like this available with these tools that you can build. So anyway, XLC has not yet gone to a new all-time high, and it has the Google catalyst. It has Meta coming. So at this point in time, from my view here, people might look for this to be at new highs, in the relatively near term. XLC. All right, XLE just also range bound, and I'm not really overly sure at this point what to think about it. There's been so much geopolitical noise. I'm going to take away this trend line though. So I'm going to put this line here and take away this trend line here. So at this point here, there's been so much geopolitical noise with Russia sanctions and will India buy Russian oil and will there be more wars in the Middle East and all this stuff. And I think that that geopolitical stuff is continuing to linger. And I think that we do have this just heavy production from OPEC, and there doesn't seem to be any sign of that going away. So from my view here, this is still more in a spot where the longer term risk may still be to the downside. We have lower highs, even though it's not an exact line. I think we can see here that we do have essentially, it's not an exact line, but each of these highs is lower than the previous. So I think right here we do have essentially, continued sort of problems on the XLE and the energy chart. And my suspicion is as time moves on, we're going to be surprised by EV market share gains. And I think that when you look at what Tesla's doing and you look at some of the other trends, if you look at some of the companies involved in EVs, some of the suppliers of different kinds, they've really rallied. There's been a lot of bullishness in the suppliers to EVs, and I think we might be at a spot when traditional energy, fossil fuel energy, starts to really actually lose demand more than people are initially expecting. And that's what the chart is potentially telling us here in XLE. I do want to mention though, one individual named Halliburton, HAL, basically had this thing when now they're trying to do data centers in the Middle East with a company called Volta Grid. So I want to just point that out. I mean, the people in the Middle East, the Saudis, and all these guys have a lot of money, and they want to decide they want to throw billions of dollars at data centers. I mean, that could be a business that actually sees some growth for a while here. So I think that's an important thing in this news in Halliburton. It's similar to what we saw in Baker Hughes, and we're basically seeing, Baker Hughes along here had that kind of news this last earnings report. So I just want to point out that some of these, crude oil names, these servicer companies are starting to sneak into the data center business. Now, XLF is next, the financials. And, from my view here, there are some strong areas, but then there's one really big, bad, big, potentially weak one, which is Berkshire Hathaway, which is actually the biggest financial. Look at Berkshire here. Now, we did a trading view idea last week on this about how Berkshire was making these lower highs. And so it's kind of interesting here to kind of see this. I mean, you can see the lower highs. There's a lot of, negative. Look at MACD on this. I mean, from my view here, we have an issue where basically insurance premiums are going down. Let me repeat that. Insurance premiums, not going down, but they are not going up anymore. All these companies, AIG, I mean, they all have been struggling here. Look at Marsh and McClellan. They are also an insurance agent. The insurance premium price pressures are going away. People don't talk about it, but I look into all the levels of data and the fundamentals, and these companies are telling you something. These guys did well back in 2022 when the Fed was raising rates and inflation was high. Look at Marsh back then. I'm pretty sure. I know the big one was AJ Gallagher, but look back here. These guys were basically rallying. AJ Gallagher was probably the big one. They had this big rally all throughout 2022, and now these are all just crumbling. So the key point is that the property and casualty space is losing pricing pressure, losing pricing power, and Berkshire Hathaway owns Aflac, which is a property and casualty name. So financials here, there are strong names, but a big chunk of the industry is faces this potential pressure. So just beware of that. Berkshire got downgraded by KBW today, precisely for the things I'm talking about. So I want to point that out. People might want to just focus on the names where the strength are, like Goldman Sachs, Morgan Stanley. These sort of names may be the areas that have more of this sort of exposure to where strength is. That's the financials, XLY. Now XLI, this is now basically setting up. Oops, XLI. I'm sorry. XLI now formed this range, and it just did not break lower. And at this point, I think we have to be watching for a potential extension to new highs here in XLI industrials. Um, I was more looking at it and seeing potential for the cyclical side to weaken. It hasn't happened, but you know what? You got to just see what the market's telling you. And the market's basically telling you here that industrials here have this tight sideways movement, not a lot of signs of a top here. And look at how this basically had this high from November, consolidated at it, broke above, held above for like the whole summer, like July, and this has been months now. And now we might be looking for this to continue higher. So from my view here, XLI, if you've got to be looking potentially for upside. XLK looks just like the Qs. Maybe it pulls back to kind of the close of last week. But there are some individual names that are important. Obviously, Qualcomm today, Qualcomm brought out some new AI chips, which I think is interesting. I don't know much about the individual dynamics of Qualcomm, but it is the leading tech name today based on that news. But Microsoft, is getting some attention with earnings coming up soon, kind of breaking out of this range, and I think that's interesting. And Advanced Micro Devices also has a government thing that was announced where basically they're going to develop supercomputers with the energy department. I mean, this just came up, so I want to mention that. And I think it's important to realize that if we look on the weekly here, the XLK, what did we have last week? We had a new weekly closing high, and it extends. This pattern we've talked about a lot. When things have weekly closing highs, they often extend, after a period of not having them. So look at this here. period of consolidation, weekly closing high. This September, you can see it went weeks without a new high. Then it had the weekly closing high, and then it extended. So the thing is that each one of these is less meaningful because it was already happening. It was trending. But in this, we had a period when, in some ways, the short-term trend stopped, moved sideways, but then we got that signal, and boom, then we got that continuation. That is XLK. XLP just range bound here in my view. It kind of continues to be range bound. These consumer staples, not the kind of risk on area people are kind of focused on or excited about. Real estate is the same way. XLRE. From my view, people you're gonna want to wait, or people probably will look for the potential here of looking for the signal to be a breakout of the horizontal line and not anything else. So from my view here, these are also range bound and could sit for a long time. XLRE. I mean, they have all kinds of issues with like loans and all kinds of stuff that people might need to see some of that clear out before they want to get excited about it. XLU utilities. We've been talking about this on this breakout and this continuation, and now it's consolidating. My view here is we have basically potentially an inside week here, consolidating above 90, and when we get on the other side of the big tech earnings, that's going to suck all the oxygen out of the room, and when the big names report. But utilities here are potentially still in an uptrend, and I think people want to kind of pay attention to that. The utility stocks here, this kind of consolidation and this inside tightness might just turn into continuation. XLV here is trying to kind of this is the healthcare. From my view here, this does have some potential of things. We've mentioned the potential of the healthcare kind of regulatory overhang getting better. And I think this is just an area that has been totally dead in the water. And we've mentioned the fact that healthcare is actually, probably aside from AI, it's the strongest overall sector of the economy based on demographics and job growth and things like that. So, healthcare has not moved the way tech has, and it's not necessarily going to. But the point is that the worst of the bad news may be over for healthcare for XLV. XLY. Now, this is another one I think is kind of most dynamic here, and this here is a new weekly closing. I mean, we're setting up. So this is the old weekly closing high here, and so from my view here, this is something where this might really be the one that extends now, in my view. So Amazon, has this Project Rainier. We talked about this in that article I showed with the robot face on it. This could be something where they've been building this new complicated data center service of some kind called Project Rainier. I think it's named after a mountain. And then Tesla, like we mentioned as well. These are members of the consumer discretionary. So from my view here, as I look overall, the ones that have kind of the most potential to extend are XLK. I mean, at this point, it is extending, but a day or two of red and something XLK goes red for 1 or 2 days. Any kind of sideways movement may be met with continued upside. But then you look at the other ones, I think that are really potentially most interesting are potential breakout in industrials, communications. Does it want to go back to old highs? And then consumer discretionaries potentially breaking out, kind of with Amazon coming and everything else. And the thing I said about retail, the thing I said about autos, remember Amazon, autos, retail, are in this, so are home builders, but they're not doing much right now. But you have those other groups, so the other industries and names inside of the XLY. So I think that's important to realize. And then utilities, XLU, taking a break after a pretty interesting breakout. People might want to watch for utilities to consolidate before it continues higher. So I hope everyone has a great day. We'll be back on Thursday for market trends, and I'll see you then. Take